Alright guys, so now in this video we're going to be pretty much going over aggressive entry methods, which there's not a lot of different candlestick signals like the bullish variation, bearish variation, bullish engulfing, bearish engulfings. Instead, an aggressive entry is formed on a rejection. So whenever you see price come to a major support level or a major resistance level and you start to see rejections, those are basically your signals to enter the market. So obviously on the screen here, you're going to see an example of a bullish rejection. Here's another example of a bullish rejection. Or if we're looking to sell, then here's an example of a bearish rejection. Then here's an example of another bearish rejection. So those are going to be like the different forms of rejections. Now we're really going to go into the market and look at the different types of rejections that you're going to see in the market. It's not just kind of those two examples, but again, it's all a rejection. So basically what we're looking at is we're looking for these different types of entry candlesticks that are all just rejections. So I mean, we're on the 4-hour time frame here. I don't trade a 4-hour time frame, but I'm going to go down to a 30-minute time frame, and we're going to look for basically opportunities where we could look for these entry candlesticks being these strong rejection candlesticks. Now actually, let's go to a 15-minute time frame. So 15-minute time frame is typically the time frame that I look for these aggressive entry methods, this aggressive entry method. So we're going to be able to find actually a few here. More importantly, what we actually have to look for is for the resistance range. Now again, when it comes down to these aggressive entry methods, what we look for is simply just a rejection. So this is an example of an aggressive entry method here. This is an example of a non-aggressive entry method. So there's two differences here. When we're actually looking to take a short position, right here, this example right here, this candlestick pattern would be your sell signal. Why? Let's just say price came up into an area of resistance, which it didn't really in this situation here, but I'm just showing you guys the examples. If price would have come up into resistance and given you a huge wick to the upside like this with a doji candlestick, then that is an example of a rejection, and essentially you'd want to enter right when this candlestick actually closes. This is the complete opposite. If we saw this at support, it would be a different story, but since this is at resistance, this is not an example of a rejection because we have a rejection to the downside. We want to see a rejection to the upside when it comes to resistance. And again, the bigger the rejection, ultimately the higher the probability of price to go in our favor. Now, when it comes to this candlestick over here, this is another example of a rejection where essentially right once price actually closed is when you would take the sell position. Now, let's actually go down into a possible area of support. So we have support all throughout this entire range right here. This is going to be our support level we're actually going to be looking at here. So notice how price came into support and then gave you the rejection and actually closed. This would be your entry signal right here, right once this candlestick actually closes, along with this candlestick too. If this candlestick closed here with the rejection of support, this would be another entry signal there as well. Now there's two differences. In this candlestick, you're entering on a bearish candlestick. In this candlestick, you're entering on a bullish candlestick. More importantly, they're telling you the same exact thing. Price came down into support and sellers were met with buying pressure, and we saw price actually reject this area of support, giving us the entry signal. So this would be a great example of an entry signal here. Now, this can also be an entry signal as well, just simply because price came down into support and rejected. Now, when it comes to an entry candlestick, typically what I like to see is price close at around the 50% mark of the rejection. What do I mean by that? We're going to be looking at the open of the candlestick, and we're going to be looking at the lowest low. If price closed about halfway from the candlestick lowest low, which is the lowest point price actually reached, or the lowest point the wick actually formed, to about the halfway mark, then that is going to give us our rejection, and that is going to give us our signal to actually enter the market. Anything above that 50% mark, I wouldn't actually enter. So notice on this candlestick here, price opened over here, but then closed here, but then the lowest low is all the way down here, went under that 50%, which typically is a great rejection signal. That's a signal that you would want to take to actually look to take that sell or that buy position. Now, again, here's another example of resistance, right? So this would be another example of an aggressive entry method where price came all the way up into resistance. We have price actually open up here, close here, and this is the highest high in this situation here where we're looking to actually sell. In a situation like this is essentially where you would make your entry right once this candlestick actually closes as an aggressive entry method. That is when you would want to enter the position on a sell. So here's another example of an aggressive entry candlestick that you could potentially take that buy or that sell position on. Now, vice versa, let's flip the roles, right? Price was going bullish, price closed bullish, and then price came down, tried to close back under resistance, but instead resistance actually ended up holding as support, and we saw price actually reject that area of support. This is another example of an entry method where essentially price tried to close back under resistance. Resistance did not hold, then it actually held as support, and in this situation you would actually take a buy right once this candlestick closes. You can see the next candlestick came back down, retested, and then went bullish right after that, which is great. Now here's another example over here. Notice price consolidating above support. Price came all the way back down, rejected, closed, and at this point in time is when you would make your entry right once this candlestick closed. Closed under that 50% mark from the open to the lowest low, and price went bullish right after that. Here's an example of a sell opportunity where essentially we have resistance all throughout this entire range over here. We had price all the way pump up into resistance, gave us that rejection. Here's the open, here's the highest high, here's where price actually closed under that 50% mark, and then that's when you would want to make your entry. And as you can see, after a few hours later, price ended up dumping to the downside. So those are going to be a few examples of just some basic rejections. We're going to go over a few more here, but again, the concept comes down to we're looking for these rejection candlesticks at resistance. We're looking for these candlestick rejections at support. Now, this would not be an example of an entry candlestick because it did not close under that 50%. But there's going to be a lot of times where it may close under that 50%, but prices move too far away from our resistance level for us to want to actually take the position. So in this situation here, this is definitely a sell signal, but what you have to consider is your stops have to go above the high here. So if the risk to reward makes sense, essentially right once this candlestick closes is when you'd want to make your entry. But for the sake of the video and example purposes, this is what you would want to look for right at resistance. This is an example of a sell. Now we're going to continue. Let's continue looking towards the downside. Let's say we have support all throughout this range here, which essentially this would be a little bit of a trickier area to look for the entry signals here. But an entry signal would essentially look something like these two candlesticks here, where if we look at it in this form here, let's say this was major support, notice all of the rejection you're getting towards the downside. The entry signal really would have been around here as well, because they both close under that 50%, tested support, rejected support, and then this is when you'd want to make your entry there. But again, it's just for example purposes. This would be another great example of a rejection here as well. This candlestick right in the middle, this doji candlestick, especially when the price gives you a huge wick to the downside and you're looking to buy and then closes bullish, that's typically a great sign for you to actually look to take that buy position. Now I'm going to go back into the past a little bit. This is another pretty good example when you could actually look to buy. You see price come all the way down. This is the support range we're looking at. Price closed right above support, then you have a huge rejection to the downside, and price closed above that 50% mark, where essentially this is where you would make your buy here as well. Now this can get a little bit tricky at times because essentially here you have a rejection, which is a pretty good rejection. You could have taken a buy off of this position here, but this is just a position that ultimately if your stop loss placement was too tight, you would have ended up losing. But I also want to show you guys the examples of a loss. This necessarily wouldn't have been a bad entry, but one thing to keep in mind is all of the rejection you have towards the upside. If you're looking to buy and you have all of this rejection towards the upside and not much rejection towards the downside, then that's simply not an entry that you should be taking. Although I wanted to get kind of the confusion out of the way, because although it is a rejection candlestick, it's not like the strongest form of a rejection candlestick. Now let's keep in mind, we're looking to essentially buy on this candlestick right here. Notice all of the rejection towards the downside. There was very little upside rejection there. So these are all different things to actually keep in mind. Now I want to try and go over another example. I want to go over the cleanest examples possible. I mean, you could look at this as another form of a rejection right here, right? Once price came up into resistance, gave you a rejection, you would sell right then and there. The most important thing about these rejection candlesticks, I'm going to switch the pair. The most important thing about these rejection candlesticks is you have to see them form at resistance. If they don't form at resistance, then essentially, like, if they don't form at support or resistance, it's going to be a very high risk trade. You want to actually see these candlesticks form at a support level, at a resistance level, such as this candlestick here. Notice how price broke above, came back down, retested, rejected support, and gave us kind of like that closure above the 50% mark, showing us a pretty good rejection towards the downside. Right then and there is when you would actually want to buy, and then you can see price continue to go up. Now, a quick example. If you were to wait for a conservative entry method, right, your entry would have been up here versus your entry with a rejection would have been down here. So look at the big difference in entries. This entry would have suffered massive drawdown. This entry you would have just been at most a break even, which is a pro of using the aggressive method. But then at the same time, like, we'll go over like the pros and cons in the next video, and then the video after that we're gonna go over tying everything all together. But I just wanted to kind of show you guys different types of entry methods. So obviously throughout your trading experience, you're gonna understand what entries to take that are aggressive, what entries to take that are more conservative. But ultimately, you're only gonna get good at recognizing these entry methods with time and experience. Those are the biggest things. Those are the biggest things in the markets, and understanding how trading actually works, and technical analysis. Because again, technical analysis is a skill that you're going to learn over a period of time, especially if you practice every single day and you actually get good at it. So with that being said, guys, I'm just going to wrap up this specific video here. In the next video, we're basically going to show you guys live chart examples of pros and cons of the entry versus the conservative method.